Okay, people are filing in. You can go ahead anytime.
Good afternoon. My name is Justin Jackson with the Community Development Administration, and we welcome you to part 3 of our capacity building training series for the 2022 CDBG non-housing RFP. I'm joined today with Brian Yoakum, our fiscal manager, and Sharon Worth, our accounting manager, to discuss financial management practices and go over some financial information as it relates to CDBG funding. And you can find a lot of that information helpful for the completion of the RFP. So the slides for today's presentation, the slideshow that we'll be using for today's presentation has been uploaded to the City of St. Louis CDA website. It's already up currently, so if you want to access those slides or wait until after the presentation to access those slides, you can do just that. So we encourage you to periodically check the CDA website for news and updates, and all future trainings and presentations will also be included on the website. As mentioned, this is part 3 of our capacity building training series. Our final capacity building training will be tomorrow at 10 a.m. and I will give you a reminder of that before we leave today. However, with no further ado, I will turn the presentation over to Brian. Thank you. Let me share one thing real quick. Yeah, click on, just click on. Yeah, I think you should be able to roll it on the right there. You should be able to roll it. Yep.
Okay. Good afternoon, everybody, and welcome to the Financial Management Capacity Building Workshop. And today, we're just going to give you some brief standards that need to be adhered to if you are proposing a application, and if you are selected, the standards that you are expected to meet. And just once a year, if you're given an award at the end of the year, you will have a fiscal monitoring review, and a lot of the things that we talk about today will be confirmed or verified that you are adhering to these policies. So one of the federal regulations, 2 CFR Part 200, that applies to all federal grants, not just CDBG. And this is where almost all the information in today's presentation comes from. These are requirements and standards set by the federal government, primarily by the Office of Management and Budget. So today's objectives are really to just identify strong financial practices for any federal program, but specifically for you're probably applying for CDBG programs. So that's the focus today. And we want to just define some key components of financial management and also describe how these components fit together to help you run an efficient and effective program. So you can hear lots of definitions of financial management, and it usually is geared to whatever your program or activity is. But this is the basic financial management definition with federal funds is the process of protecting and using federal funds effectively, efficiently, and transparently. It is achieved through systematic application of procedures, forms, rules of conduct, and standards. This is important because the federal and local laws require it, and it ensures accountability, and it helps to make sure the money is used as intended. So, in another way of saying, a lot of this is you have a strong system of internal controls. And, internal controls, it can be any method to really a structure you set up to ensure compliance. It can be just with your table of organization and how people report to each other and the chain of command. You can have forms where people fill out and somebody signs off on approval. You have basic rules of conduct and any other standards that helps you assist your agency to comply with the various rules and regulations relevant to this activity. Financial management systems. There's a basic core of principles that guide us in trying to help you adhere to efficient management of your activities. And we want to promote integrity by protecting funds from being wasted and ensure that the transactions are clearly documented and easy for HUD and federal agencies to understand. And like I say, everybody is going to be monitored and reviewed at the end. So you want to make sure that you document any transactions that you record and any costs associated with the programs. You ought to make sure that you're well documented. One of the things that's required is a budget. And in your application process, you will prepare a budget. And that's something that is required and by the federal regulations. So, it's just helpful that in the application process, you are required to prepare, submit a budget. And that's without telling you, we're just helping you comply because that's one of the requirements. And you just do that in the application. And if you adhere to that budget, and you're going to stay in compliance. You can, you got all kinds of different regulations, including federal cost principles. And you can, some of the procurement requirements we have, we also have to follow federal regulations, but the city as well. So it's not just, even as a federal program, there might be more than just federal rules. There are some standards that the city has established, and we are required to incorporate those. And we try to cover all those today or in our training in February, if you are selected for an award. We want to strengthen the programs by increasing efficiency and providing valuable information for program managers and others. Dollars are not easy to come by, and the more efficiently you expend your money, the further you can go with it. And we're just as we get information from HUD or any other federal entity, we will pass that information along to you. So some of the key components, and these are not just really standard for federal program, but these are common practices for most corporations. But the key components that HUD that are in the uniform guidance is what Part 2 CFR Part 200 is called, the Uniform Guidance of Federal Uniform Administrative Requirements of federal government. So the key components for the financial management are cost principles, budgeting, procurement, internal controls, accounting and records, reporting, and audits. And I'm just going to briefly touch on each one of these because there's some key things that you have to adhere to on each one of these. the cost principles, we define what is allowable and reasonable, what is an allowable and reasonable expense. Basically, if it's anything that's necessary, reasonable and necessary to carry out your program. And in another presentation, we're going into that in a little more detail. But some of the basic concerns is the cost allowed by your funding source. And it's like, an easy way to think of this is, how is my expenditure relevant to carrying out the activity that we've proposed to do? So if you can defend that your expenditure is very closely associated with the activity that you're proposing, then you're on safe grounds. You're going to be all right. And is the cost reasonable? Meaning that would a prudent person pay this amount for this item, and is it necessary? In other words, you don't want to go down and spend $20 for something because you only had to walk across the street to buy it. But if you go down to, Home Depot or Office Max or somewhere, you can get it for $5. It's a prudent person is going to take the extra 15 minutes to save a little bit of money. And that's, we just spend your money efficiently. Can the cost be allocated to a specific funding source based on what we know about the cost and what it's paying for? So it's just another way of saying, whatever cost you charge, it is easily identifiable as necessary for this program, and you have a reasonable way of allocating the charge if it's not just for that. An example would be like insurance or utilities or some shared resources. You just have a common sense allocation process that you can explain and demonstrate how you came up with the allocation. And financial management system, the budgeting. Like I say, everybody's required to do a budget, and that's part of your application process. And it also makes its way into one of your monthly reports that you have to submit by the 15th of every month. And you pick up your budget off of your application, or when the award is, if you're awarded and you may have to adjust your budget. If you're not awarded the exact dollar amount you requested or proposed, then you're going to have to adjust your budget to what you are being awarded. And then that budget will go on the bottom part of your monthly financial statement. And that's something you will report on every month. And you will track your budget, actual expenditures, and what's remaining. And that's just a tool and a guide to help you maintain your cost and make sure that you're on track to achieve your goals by the end of the year. But it is a requirement, and like I said, it's an ongoing check for reasonableness when you compare your actual request against the budget, and it ensures that what remaining funds you have available, you can visually see what that is in the monthly statement that you submit. There's one column for every month. You have your budget, your beginning budget, and then your 12 months, and then your remaining funds. So in one shot, you can see a view of these dollars and cents, what you've done for the whole year. It's on one financial report that is submitted monthly. Procurement. This is the sticky point. Federal government requires it for various reasons. And it's important not just to promote the cost reasonableness, but to make sure that you purchase it in a way that's fair and transparent. You know, and if you expend in more than $2,000 per year for your activity, you need to get approval from CDA. And let me go over this. This is cumulative. So let's say you buy a lot of supplies, say office supplies, and you get out an Office Max. So throughout the year, you keep track of your expenses. And if you exceed $2,000, then you have to stop. And you need to stop before you get to 2,000 and notify your program monitor, because you have to get permission to spend more than $2,000 with any one vendor. And that's per year, per contract. It's actually per contract. Let's say you run into January and February you only got 12 months to do your work, but make sure that you, we'll talk about that later, but just if you get to $2,000, before you get there, contact your program monitor so that you can put in a procurement, which is just documentation that you've solicited bids and that you're trying to find the best and reasonable price, and that you will be given a letter approving your purchases to exceed $2,000. And this should be true for not just supplies, but for services as well. Financial management, internal control. This is something really important, and it helps with compliance. And internal controls can be anything, and they're designed to minimize errors and to ensure compliance. And ultimately, it's really just a combination of tools to make sure that no one person has control over everything and can just do what they want. You have to have authorization to and permission to do it, and we require this so that there's checks and balances, to make sure that to help you stay in compliance. And an example is if you have income requirements when for your clients, then you might have a form that they would fill out when they come in, or documentation that they provide to you, which right off the bat, you're ensuring compliance. And this is an internal control to make sure that your client qualifies for your activity that's funded with CDBG. And other things are just purchasing items. You might, you don't want to go over budget, so you might submit a request to purchase something, and you might submit that to whatever your company's policy is, but usually the finance section or sign off saying, yes, the funds are available, and then you have permission to spend up to a certain dollar amount, and when the invoice is presented, then you present that with your approval. That's just another method of internal controls. But internal controls can be anything from just personnel signing off on something, forms being filled out, just anything to assist you to stay in compliance with your program rules and regulations. Accounting and records. Okay, fund accounting is a specific type of accounting. It's used by you guys, whether you know it or not. It's a method of recording based on sources and uses of funds. And you want to be able to identify where you got the funds, which in this case is CDBG, and then the uses is your expenditures. And you want to be able to document that, and that becomes your source of your reporting that you present to CDA every month. Yeah, like reporting is a mechanism that the program staff and finance staff use to verify and document that funds have been used according to what your budget is and what your activity has proposed, and stay in compliance with that. And an example would be if you're public service activity and you have a per unit type of reimbursement. Let's say you say you're going to assist 100 clients throughout the year. On your monthly report, you will state how many clients you served that month. And then you have a predetermined rate in your contract. So when you submit that for reimbursement, you're going to have a document that says, this is people that I serviced this month, this is the rate, this is how much I'm requesting to be reimbursed. And all this stuff should end up in your payable system and work its way into your financial reporting that you present to CDA. Like I say, and we do check both programs on a per unit. When you submit a request for payment, finance or pass it by the program side, and they're verified that they've received their monthly reports and they have documentation that that can support what you're saying you have done. And when they sign off on it, then fiscal will go ahead and process the reimbursement. So that on CDA's side, there is a coordination between the program side and the finance side. And your programs are typically 12 months, January through December. So, we work closely to monitor your expenditures throughout the year. It's important that you expend your award timely, and then by the end of the year that you're in a position to accomplish the outputs and the goals that you mentioned in your proposal. And it's just another tool to help you stay compliant with what you're proposing to do. And not least of all is auditing. That's what, every year most companies have an annual audit where their auditors come in and check things out, mainly on the financial side. You have an independent third party that should be able to keep independent and not be partial in interpreting the rules and regulations. And that's not just it's just to find fault, but also to provide guidance in case there was a rule or regulation that you had forgotten about or weren't familiar with. It's just another tool that's required by the federal government. And a single audit in and of itself is not going to ensure compliance. It's just one of the components of the financial system to help you. And so the other pieces are the things that we've mentioned, like budgeting, procurement, internal audit, your reporting, and all these together are going to help you stay in compliance. And these are the minimum standards that you have to do just to monitor your output. So at this point, I'm going to turn this over to Sharon, and she's going to proceed on with some other topics.
Okay, good afternoon. I'm going to talk to you a little bit about the cash management process. And basically, we talk about cash management in this respect. We're talking about how the method by which the subrecipients receive their funds, how funds are transferred to the subrecipients. And for our general purposes, that happens one of two ways. Either we have what we call actual expenditures. Sometimes we refer to it as direct pay, and then we have a fixed price method of reimbursement. For the actual expenditures, that basically involves you just submitting the actual documents that were expended or paid for by you and you're reimbursed for it. So that would be any invoices, the actual invoices that would be used or that you would have paid. And so those would be our direct pay. We pay those directly. Well, we reimburse those directly through your submittal for reimbursement request. And then there's the fixed price for each unit. And that's our per unit method. The per unit method means there's a fixed price for any unit or unit of service. And that information is reported on your programmatic reports. And when you submit your request for reimbursement, you submit those programmatic reports through eGrams, and a copy is attached to us as backup to document units of service that you're requesting reimbursement for. And we verify those through the programmatic side of CDA and confirm that it's actually happened, and then you're reimbursed by verification of your unit of services. Now we'll get into allowable and unallowable costs. So in determining whether or not your cost is allowable, the main source, there are some, I guess, basic common sense issues, of course. You know, is it applied to your program? Does it abide by your processes and procedures? Is it subjected to is it applicable to your objectives of the grant? The resource that you would use, if you have any questions about that, would be the 2 CFR Part 200. That's your Code of Federal Regulations. And they extensively go into what's allowable and not allowable for any particular type of service or activity. And this allowability process applies to all costs, whether it's direct or indirect. And here's some guidelines for determining allowable costs for your CDBG grant. First and foremost, it must be necessary and reasonable. You heard that term earlier in the presentation. That's just your standard guideline. It has to be necessary for and reasonable for your particular activity in order to be allowable. It must be allocable according to the CDBG grant. So it has to apply to the objectives of your grant, what the services that you're providing. It has to conform to limitations. That means that it has to be lawful and then within the conditions of the award. It has to be authorized and at least not prohibited under any state and local laws or regulations. It should be consistent with policies, regulations, and procedures. That is internal and external, so that's with the federal guidelines as well as your own. And it must be in accordance with generally accepted government auditing standards. So when you're reporting, for accountability, you're doing your accounting process, documenting things, It should be within those guidelines. And again, adequately documented and mentioned that, and then treated consistently with other costs. So that's all costs across the board. So whether or not it's CDBG related, just your standard order of business, everything should be treated the same. And then of course it should be net of all applicable credits. So if you got credits that apply to any of those things, that should be taken into consideration as well. Okay, necessary and reasonable, back to that again. What makes a cost necessary and reasonable? Well, you heard earlier about the prudent person rule. What would a prudent person do? So first and foremost, it should be necessary. If it's not necessary, of course, it's not allowable. What makes it reasonable? Well, what would a prudent person do? So a cost is considered reasonable if the average person would abide by or follow those particular guidelines with determining whether or not something is necessary or if it's within reason. It shouldn't exceed anything that an average person would consider, normal, and it shouldn't be out of the realms of something that would be necessary to carry on your business activities, especially for something at a particular time. Sometimes things are taken out of the normal realm of business if the conditions are different. But at the particular time, if that's what's applicable, if that's what's necessary, you want to think, what would the average person do? What would a normal person do in a situation like this to consider it reasonable? So that's your prudent person rule in determining what's necessary and reasonable in carrying out your objectives. Some other things to take into consideration when you're trying to make this determination is, would it be ordinary and necessary under the federal award, under the guidance of your federal award? Would it be recognized as ordinary and necessary? So again, we're talking about with your particular objectives, would the activity fall within the guidelines to complete those objectives? Does the cost conform to sound business practices? Does it make sense within your activity to carry out these particular activities? Is it arm's length bargaining? Is it reasonable? Is it something that you had to go to some extremes for? Or is this within reason for determining, say cost or activity or effectiveness or efficiency of carrying out your business? Within the laws and regulations, of course, you have to abide by those, and then with the terms and conditions of the federal award, are they within those guidelines? And then was the cost incurred using the organization's established practices? So as long as they're within your guidelines and foremost the federal government's guidelines, it should be, you should be okay. Now here are some of the more common allowable costs. And basically these are just activities that are standard business operations. I'd say just for general business operations. You have the cost for accounting activities, cost for maintaining your accounting information, your accounting system. Any advertising that may be necessary will be taken into consideration. That would be allowable. The bonding costs, communications, you have telephone and mail, of course, employee compensation for your direct pays, and then also taken into consideration with your indirect costs for your per units. Legal expenses required to administer the program. If you have need of a dispersing service, that would be allowable. Employee morale, health, and welfare costs. Taxes, which are users' fees for benefits for federal government. This does not include sales tax though, that's a different thing. Equipment and capital expenditures, publications or printing costs necessary to carry out your activities, and then any rental costs. Like I said, these are basically your standard operating. These are things that you would normally encounter when operating a business. And if you have a situation that doesn't fall within those categories, remember your 2 CFR 200 would be your reference point. Now, on the flip side, these are some more of the obvious things that would be considered unallowable costs. No alcoholic beverages or bad debts. Contributions to contingency reserve for events which cannot be predicted. Contributions and donations. Legal expenses for prosecution of claims against the federal government. Any entertainment costs, fines or penalties. Goods or service for personal use. And that's particularly important when you, say you're at Home Depot or you're at some of these other places, you're picking up some supplies, Office Max or whatever, and you want to grab a candy bar, a soda pop, something like that. When you're submitting your receipts and your documentation for that, make sure you X those things out. Fundraising is not allowed. Any lobbying, losses on other awards, or sales tax. So to sum it up, basically what you want to ask yourself when you're trying to determine what's allowable and what's not allowable, ask yourself, does your agency have a clearly defined set of standards and procedures for determining the reasonableness and allowability of costs incurred that is consistent with the federal rules? So you want to make sure you have something in place so that anybody who's in a position to say purchase something or to authorize something, an activity or a purchase, they know what the guidelines are. So do you have a clearly defined set of rules so that anybody would understand whether or not something that they're doing or something they're authorizing is allowable cost, and does it comply with the federal rules? So when you're establishing those guidelines, you want to look at what the federal guidelines are and make sure they're aligned. And then also, does your agency know what's prohibited under the CDBG program? So you need to know from your contract what's prohibited from the CDBG program that you've been awarded. Okay, so Brian's going to continue with the accounting records and source documentation.
Okay, thank you, Sharon. I'll move on to source documentation. It's required. I talk a lot about accounting records, and I do like to emphasize that once a year, your program is going to be monitored by the fiscal side. And so somebody will come out and do a fiscal monitoring for your particular activity. Really, for each award that you receive from us will have a fiscal monitoring. And I'm not going to speak for the program side. You're probably going to get another vision from them. But I'm only going to speak for the fiscal side. So some of the things we're looking for is that you obviously adequately document everything. And you can start with the checks that we send to you, or you request payment on, and how you record those on your accounting system, we don't tell you exactly how you do it. You just have to, everybody's system is particular to their agency and the nature of their business. And, you know, as long as you're able to extract the data out of your accounting system to do your reporting that's required for CDA, then, and if it complies with the basic principles that we talked about earlier, then you're in good shape. And, you know, one of the things like identify the source. And some people on their accounting system, they might have a way of just segregating each activity where it identifies the revenues and the expenses together. Or in a more complex system, you might just base everything on account codes. Like you have a different accounting code for, say, block grant or for donations or for other kind of revenues. But you're going to have a specific code that relates to the payments you receive from CDA, and not just general and CDA, but specific to the activity. In case you have more than one activity from us, you're going to have to show which activity that was for. So, you know, you have to be able to identify on your accounting system the source of the funds that you receive, and also the application to that funds, which is another way of saying your expenditures. And this your expenditures were specific to the activity that was funded by community development block grants. These are some of the key things that are on most systems. But again, depending on the nature of your and the complexity of your system, how big and small your organization is, you might have some of these individually, or some of them might be, they use another term, but they're achieving the same purpose. They're, you know, you're really doing the same thing, but just in a more adapted for your particular needs. So you have a chart of accounts, which identifies the different accounts such as revenue and expense, cash, assets, and you know, that's just a mechanism to help you reporting, so you can pull the data out of your system and make it available for you to prepare your reporting. Cash receipts and cash disbursements, you know, again, your expenditures and everything works its way into the general ledger, which is the last choice there. And so you might start with the general cash receipts journal, and you know, one person might enter all the checks in there, and then somebody else will attach them to a code. And whatever your system is, just these are mechanisms to get everything functioning properly and reported properly within the accounting system. And the general ledger is really where all the financial reporting is. The detail is posted, which is then works its way into the financial statements. Accounting records. The cost charge against CDBG funds must be properly approved, which means, you know, you have authorization to expend. Like I mentioned earlier, one person cannot just completely oversee it. Like you as an individual can decide, I'm going to go out and buy this, and then you come back and prepare a check for it and send it to us. Well, you're the only person that knows that what that transaction was about. It's got to go through a system where somebody approves your purchase of it. You get out and buy it, get an invoice. Somebody else might cut a check to that company, and so on and so forth, depending on how your internal controls work. You got to show approval, an approval process when you purchase something, whether it be goods or services. And when I say supported by documentation, that can be basically your invoice. And on your invoice, you're gonna have various information, and which is pertinent to the compliance. For example, when did you purchase it? Or when did the activity take place that you're being billed for? Did it occur within your contract period, meaning between January and December of your period of performance that's stated in your contract with us? And just because, say you recorded it on an accrual, you incurred it, and you're going to do another transaction when you paid it. We just have to be able to see that it was paid, and then from there we look at those costs and verify that they were eligible costs. So these are the things that you must provide and that we look at. We do random samples when we come out. We might pull half a dozen invoices, or just depending on the nature of your activity, and we'll go back and check all these things out, make sure you're compliant. This is basically I've already covered this. I'll skip this slide. Your source document. Okay, let's say you have a fixed unit of performance, like your contract states you're going to help 100 clients, whatever the nature of your business is. It could be a daycare service, or it could be serving, providing meals, and you're going to have a contract price of a per unit, and then you're going to have the documentation on your programmatic reports that how many people you serve, and you multiply that by the number of people you serve by your contract price for your unit of service, and that's how much you receive from us. But at the end of the year, your goal is to expend your entire award amount, but you're a nonprofit. You can't make a profit off of us, off the federal government. So at the end of the year, you have to incur costs equal to what the amount of the award is. Otherwise, my first thought would be maybe your per unit amount is not correct. You need to revisit that. But in other words, if we reimburse you, say each unit is your contract's for $25,000. You got 100 units. That's $250 a unit. So we pay you at the end of over 12 months, $25,000. But you can only document $20,000 in expenses. So we've paid you $25,000, and your expenditures to carry out the activity are $20,000. You've made a profit of $5,000, and that's not allowable with a block grant award. You're a nonprofit, so either you're going to have to resolve this somehow. Either pay $5,000 back to CDA, or during the course of the year, if we notice this is a problem, or say something to you, and you're going to have to work something out. Either increase your activity number of units more than you expected, but enough to incur additional costs to meet what we've reimbursed you. But anyway, that's really what we're saying here. At the end of the year, your expenditures have to be at least as much as what we reimburse you. We pay you. These are just examples of eligible costs and the different documentation that you have to maintain to support those costs. Personnel costs, right off, I'd say you're going to have to keep timesheets. If you're charging payroll costs, the block grant program, you're required to keep a timesheet. And if you got somebody that works on various programs, not just the activity that's funded with CDBG funds, you need to add a column. And one is say CDBG, and it's saying on a particular day, you spent half a day on the block grant program and half a day on another program. So you're gonna list when you sign out, I worked 4 hours for CDBG, and whatever other program you work at, that'll be reflected in another column. But you also, and this is in the application, you're gonna do a personnel schedule that shows the individuals that are gonna work on the program and how much time they might spend on it. And your timesheets will back up what you're gonna charge to the program. And payroll registers just verify that you were actually paying the staff and that the expenditures were made. And then if we're gonna reimburse you for your gross pay, you also have to show that you paid your taxes. That if we reimbursed you for certain payroll expenses, the only expense is not just the salary of your individual employee, but it's also can be taxes, healthcare, any benefits you might have. You have to have proper documentation tied to the block grant program. And the timesheets is the main mechanism. And if you don't have timesheets when we come in to review your records, chances are you're gonna have to refund some money to CDA. Also local travel, the most common one is just travel. If somebody uses their own vehicle to go out to carry out the activity, they have to keep odometer readings and track their mileage, and we reimburse by the mile. And I'll just mention, this is another area where the rate that is established for the city, they update the reimbursement mileage rate every year. That is the rate that you will be reimbursed by. So that's just something where the city of St. Louis regulations come into play here, and not just the federal. Even though this is federal funds, we're still going to follow the mileage reimbursement rate set by the city. And contracts, like I mentioned, anytime you spend more than $2,000 with any one vendor during the course of your contract, if you're going to go over $1,000, you have to do procurement, and you do that through your program monitor. So if you're going to reach that for the year, you want to contact your program monitor. And when they approve the procurement, then fiscal will receive a letter stating, what's been approved and what vendor, and we'll track that. Either with a monitoring visit when we come out once a year, or if you're direct pay, then we'll track it as the year goes on, each month when you submit your payments, a request for reimbursement. Supplies, again, you want invoices and the same procurement. If you spend a couple $100 each month buying supplies from Office Max, once you hit $2,000, you just have to show that you've done your procurement. And equipment, that's not a common expenditure, but it is something you want to contact your program monitor with, because HUD is very particular about equipment that is purchased. It's got to be clearly absolutely necessary and essential to your activity in order for it to qualify for CDBG. And if it's going to cost more than $2,000, you have to have prior approval and through procurement with your program monitor. And I'll just mention this, there's two sides to CDA that you're coming in contact with, the program side and the fiscal side. Normally your primary point of contact is going to be your program side. So you would contact your program monitor anytime you have questions or concerns. But you can't contact fiscal directly, but it's going to be should be specific to either your monthly financial report or your request for reimbursement that's submitted to fiscal. Anything other than those two items, you should contact your program monitor. So other types of common expenses, printing, for various reasons, insurance. Again, insurance, depending on the nature, that might be done by allocation, and you just have to have documentation explaining and justifying your allocation process and how you determine how much you're going to charge the CDBG program. Telephones, a comment on cell phones. And this is another city requirement. The city limits reimbursement on a personal cell phone at $25 a month. If you have somebody in your agency that this particular activity you're performing on our behalf is requires work out in the field, so to speak. So if you employee goes out in the field and has to have contact by telephone, and they use their personal cell phone, the maximum amount of reimbursement per month will be $25. And that's obvious because they're going to use it in the evening for personal use, so we're not going to pay the full amount. Facilities, if you have a building or rent space or something and you utilize that to carry out your activity that's funded by CDBG, you can request reimbursement for things such as rent and utilities. But again, you've got to document, like, the whole office is not going to be used for block grant, so you can't charge the full amount. You're just going to have to be able to provide a lease and how you allocated the space and ultimately the utilities if you're going to charge it to the block grant program. Again, if you want to be successful and let things go smoothly and accurately, the financial management system, if it's to be successful, you have to have accurate documentation, accurate records. It's got to be reliable, and you got to be timely. You have to be up to date with your records. Like, don't wait a month or two to record your transactions. If you're going to be submitting monthly reports, it has to be, your information entered into your system on a timely basis, which should be weekly or at very minimum monthly. And in the end, there's information that has to be reflected, and you also have to be able to track it this way, and that's the amount of federal funds that you receive. And in our case, you have to show how much you receive from us for that particular activity. You're going to have a budget maybe, so that'll list your authorized funds and obligations. Let's say you get procurement approved for something. You're going to want to show that because that'll prevent you from overspending. Like if you have a budget of $10,000 for this certain line item, you want to show your procurement of $2,000 that you've been approved for. So you have $8,000 remaining. If you don't put your procurement in there, you might forget about that and overspend. And when you come time to purchase an item, you don't have the money. So that's why your procurement needs to be set up possibly as an encumbrance or to track your balances. And then your income statements, you're all going to have assets and liabilities. And if you receive program income, you've got to track that. Not everybody does, but if you do receive program income and it was generated because of an activity CDA funded, then you're going to have to return some of that. So you're going to have to track program income. And of course, the most obvious is actual expenditures. And just make sure that at the end of the year, actual expenditures are at least as much as what you've been reimbursed by CDA. So, there's some important questions you can ask yourself about your accounting records. I mean, do you have an adequate accounting system? And adequate meaning it complies with the federal rules and it helps you track what you're required to track and present on your monthly financial reports. Is it reliable and up to date? And a trial balance, and you should report them. You're gonna, your monthly financial kind of forces you to do this stuff every month, because to get the information you need to report on your monthly financial statements, you're gonna have to run some of these reports, and you're gonna have to have the information in your system. And so that is why it's important to stay up to date, because it makes it easier to timely and accurately prepare your financial reports. So at this point, we're going to switch from source documentation, and Sharon's going to talk about the disbursement process.
Okay, under the grant fund disbursement process, we're going to talk about different types of activities that are administered under certain CDBG grants. Some of those include, your program is probably going to fall into one of these categories for the most part. You have administration and planning. We have construction, citywide home repair, economic development, and public service. For the most part, you will fall into one of these categories. So just to talk a little bit about these activities and how you would go about submitting reimbursement requests for the various activities. We'll start with administration and planning activities. And this basically falls under the direct billing category. We talked earlier about submitting the two categories with which you would be reimbursed, being the direct pay or the per unit category. And so administration and planning would fall under the direct billing category. So you would be submitting actual invoices or copies of invoices to CDA. And this includes payroll registers, timesheets, personnel costs, that are to be charged, because that's basically what your administration is going to be the bulk of, is your payroll. And so, again, Brian explained why this is necessary so that we can verify, that employees are being paid. The documentation of the timesheets would indicate the actual hours being spent on CDBG projects. If, whether it's 100% or a percentage of time being spent, we would need to see that being documented daily on on timesheets. And it's just to verify that the personnel costs are being accurately charged. Employees would sign those timesheets, and of course supervisors or authorized person would verify the accuracy of those timesheets. Costs for services and supplies, either from a vendor that's over $2,000, of course, we have to have the procurement. You have to have authorized procurement from CDA for it to be considered eligible costs, be it CDBG or home expenses. Again, the approval for this procurement comes from your program monitor, and it's required before the invoices can be processed for payment. So again, it's important if you're not anticipating spending $2,000 or more with a particular vendor, and it gets close to that point, you want to, so as not to disrupt your flow of activities, your flow of business, you want to make sure that if you're not going to be done with this particular vendor, that you solicit approval from your program monitor in advance of reaching that $2,000 threshold, because at that point you won't be able to request any reimbursements until that approval has been given. And this again is for activities or for services provided. Now, with construction activities, some of the documentation required are payouts and drawdowns. That's the form in which construction activities usually request for payments. And those requests have to show that the project is complete, or that at least CDA's portion of the project has been completed. There's a project inspection to verify that the percentage completion is adhered to, and prior to any payment processing, the documentation must be submitted for the following areas, if applicable. Their labor standards, Section 3, programmatic reporting, and MBE and WBE participation. Some of the construction activities, most of the construction activities require that these categories be adhered to, and you must make sure that that compliance with these activities has been provided. Now, with citywide home repair activities, normally you have two categories for reimbursement. The administration part, of course, would be through direct billings. Again, we're talking about payroll registers and timesheets for the salary reimbursement of those individuals working on these particular projects. Well, we went through earlier the necessity for submitting that documentation. And then there is the actual housing units themselves. The work being done on these units must be supported by, once they're complete, they must be supported by the documentation you see there, which include the scope of work, what's being done for this particular unit, a signed contract between the homeowner and the contractor, a deed of trust, if applicable. In not all cases, a deed of trust is required, but in the event that it is, it should be submitted. And usually the next two categories, if you have a deed of trust, the other two follow suit. So There's a promissory note and a right of rescission. Normally those three together, you usually see those three together. If it's grant funded, then of course you wouldn't have the necessarily have the deed of trust or any of the other two. All of them will require a payout order. The payout order is usually signed by the homeowner, an invoice from the contractor, a certificate of final inspection, and a CBI clearance. And that basically is geared towards the actual contractor that's doing the work. Now, in minor home repair, let me go back. Okay, citywide home repair, minor home repair activities, the required documentation for completion of the services provided for a housing unit include the proof of ownership, proof of income, proof of age or disability, and the repairs completed. These documents will be maintained on file to support the activities that are done on that particular unit. So these don't have to be submitted for payment, but they have to be on file. With economic development activities, it depends on the type of activity, program activity being carried out, and the required reimbursement for those activities vary. With business development loans, you have to have prior CDA approval and then the loan closing documentation. For commercial district improvements, you would have prior CDA approval and completion of the construction work. And with technical assistance, this is a performance-based. So again, we're talking about per unit. So the number of units, the number being served, and the service provided. And this is reported on your programmatic report. Now for public service activities, this is your per unit cost. So it's a fixed rate for a unit of service completed. And the fixed rate for each unit will be included in your CDA contract. So prior to any reimbursements being issued or requested even, that's pre-established. When you receive your contract agreement, it will already have been determined what the fixed price is for each and the number of units for your particular activity. So here are a few examples of units of service. We talked a lot about units of service, and here are a few that we see most commonly. The number of meals delivered to seniors. So you would have a fixed price for the number of meals being delivered. The number of completed workshops, say for first-time homeowners. So for a number of workshops, so for each workshop, let's say you would be reimbursed a pre-established rate of $1,000 or $2,000, whatever it is, for each workshop that's been completed. The number of completed job resource fairs, you have an established rate for each resource fair that was conducted. The number of days children attend after school programs, and then the number of gardens planted. Just an idea of what the various units of service could consist of. I'm sure there are many others, but here, these are some of the ones that we've come across so far. And for the performance-based reimbursements, as you just saw on the previous screen, here are some of the guidelines for those. The fiscal and program staff work in conjunction to ensure that activities are completed prior to reimbursement of the grant funds. And that's basically because you're on a per unit basis. So you're reporting on your programmatic report if those activities have been completed, how much has been completed, for a particular time period. So each month when you submit your programmatic report, that information is turned in. And when the fiscal staff receives your request for reimbursement, that information is included as your backup documentation. And then we would work with the program staff to verify that those activities have been carried out successfully. Your payment requests must be supported by the information, like I said, provided on your monthly programmatic report. So again, we don't look at it, we look at the numbers, but the details would be confirmed by your program monitor. And once they approve and say that everything's okay, then we move forward with processing your request for reimbursement. An example of that is, let's say you reported that you served 50 meals in January on your programmatic report, and you submitted a request for reimbursement for 100 meals served in January. Well, your program monitor is only going to approve what's on your programmatic report, which is the 50 meals. And that's why we have to cross-check with the documentation submitted to your program monitor to confirm that what you're requesting for payment has actually been verified or is legit. So again, we work real closely hand in hand with the program section, the fiscal section, to verify that that your request is substantiated. All right, so now we're going to get into another section of reimbursement payment versus eligible costs. So you as an applicant will be required to complete the proposed activity budget detailing your eligible expenses by line item in e-grams. And these are just a couple of the questions that usually surface with regards to the eligible costs. So what is it and how is it relevant to my grant if I'm paid on a per unit basis? Well, the total cost of the award for allowable direct and allowable indirect is less any applicable credit. So basically it's what you were granted, your award, your grant award, less any credits that would offset your award. That is your activity budget. So your activity budget basically describes what activities you're going to be conducting, what you were awarded to carry out those activities, and anything that might offset those particular costs. Now your direct costs would be any cost that's specific to your obtaining your final cost objective, directly associated with your particular grant award, directly affiliated with any of the activities to carry out that particular objective. And then your indirect costs are those that have been incurred for common or joint objectives and cannot be readily identified for a particular final cost objective. So basically, some things you just can't apply specifically to an activity for your grant award. So those will be kind of combined together with other cost objectives, and that's going to be your indirect costs. Now, there are some agencies that will have an indirect cost rate, and in determining, what portion of your indirect costs would apply to a particular activity. For those that don't have an indirect cost rate, you are allowed to use, the federal government allows you to use 10% of your grant award to be the determining factor of your indirect cost. But again, if you have an indirect cost rate that has been awarded from the federal government, you would indicate that at the time of your contract. Okay, so how is an activity budget relevant? All of your block grant payments must be supported with CDBG expenses, with block grant expenses. And that was kind of touched upon a little earlier by the statement that if you carry out a particular activity, you have to show where you expended that amount as much or more towards carrying out that activity. So on a per unit basis, you're getting reimbursed per unit, a flat rate per unit. But there's activities that go into getting that, accomplishing those objectives and getting that work done. And you have to be able to show what eligible expenses support having carried out that particular activity. So that would be your eligible CDBG expense, anything that would be involved in carrying out that objective and reaching that goal. So any unsupported payments must be returned to the city of St. Louis. So again, if you've been reimbursed for an X amount of activity or X amount of units of activity, but you can't substantiate that through your eligible expenses, then you would have to return those funds. And just understand that just because you completed a particular program of activities, it does not mean that you've satisfied your eligibility requirement. So you have, again, those have to go hand in hand. You can go above, your eligible costs can go above what your reimbursement was, but it cannot fall below. You have to at least expend it the same amount of activities or expenses that it takes to substantiate reimbursing your per unit activity. So just because you completed activity doesn't mean that you've satisfied the eligibility costs. It has to go, you have to show that you've satisfied that obligation. All right, so now we're going to talk about reporting requirements. Okay, earlier it was mentioned that there's a monthly financial report that needs to be submitted monthly. Again, that helps you maintain your accounting records accurately. If you do this on a monthly basis, and some of those accounting reports that were listed, your trial balances and things like that, help to support keeping your accurate records, your accurate monthly financial reports. It's important to know that they must be accurate and timely. They're due on the 15th of the subsequent month. They should be current, and they should represent a complete disclosure of your financial activity for your particular grant. I think I got ahead of myself here on the when that they're due. It's going to come back up again. But your monthly financial report will show your budget, which is the amount your grant award is, the grant reimbursements received. So when you submit your request for reimbursement and we process that, you get a check from us, it's going to show that you received those funds. And then actual costs incurred and available balance. Your actual costs incurred is going to be those allowability costs we talked about. And This is gonna show your available balance, so what's left, as a result of having received your grant reimbursement and expended those, actual costs. So here we go. The financial reports are due on the 15th of the month following, the reporting period. And they are submitted through eGrams. And the report is uploaded each month for review by the fiscal staff, and then they'll approve it. And then well, if there are any changes to it, of course, then they'll allow you to make changes to it. But once everything is final, they'll approve it, and then you'll be okay for the next month. So the 15th of the month, we do hold you to that. We encourage you to get them in timely. It helps us to not hold up any requests for payments that are forthcoming, and it gives us an idea of, especially with the per unit awardees, it helps us to monitor your eligible costs versus the what you've been reimbursed, your activity costs. So for instance, this is July, so let's say you completed your July activity at the end of this month. By August 15th, you would submit via eGrams your monthly financial report for the month of July, for the period ending July 31st. And so each month is due on the 15th for the previous month's activity. When the fiscal monitor comes out to review your documentation, your reporting documentation for your program, they will be looking at how timely you were in submitting your monthly financial reports. So it's important to try to get it in on time as much as possible. Okay, I think that concludes the financial reporting requirements. I'm going to turn things back over to Justin, and he's going to close us out.
Thank you, Sharon. Thank you, Brian. I see that there's one question in the chat room. How long is the approval process through your monitor? So in terms of a program monitor approval process, all situations vary. The most important thing is to make sure that you've submitted all documentation that's been requested by your program monitor. Oftentimes, documentation comes in pieces, or there's information that's missing. And once your monitor has received all requested documentation regarding the approval process, whether it be procurement, whether it's a budget revision, on average, we look to turn things around in a time frame of 2 to 4 weeks. So from that time frame, we will make sure that all revisions are completed, and that the necessary approval process from program to fiscal is carried out. So that looks like all the questions that we had. We'd like to thank everybody for tuning in today. As I mentioned earlier, this presentation is available on the CDA website. So you can go to the CDA website, and if you'd like to download this presentation as well as any of the previous presentations this week for your record, you can go ahead and do so. Our next training will be tomorrow regarding eligibility and best practices, and that will be at 10 a.m. So we thank you all, and we look to talk to you and see you all tomorrow.